After months of speculation, QE2 is finally about to set sail. The Fed is going to announce some form of quantitative easing, that is, a program to buy more long-term bonds in an effort to get the economy rolling again. A lot of questions about whether or not it will actually work. How big will the program be? Should the Fed be really aggressive? Because let's be honest, QE2 is something that could spark inflation down the road. It's not as if rates being too high is the problem. Rates are still relatively low. So you can argue that QE2 isn't going to do much to get banks that aren't lending money to start lending again, and consumers who aren't interested in taking on more credit to start adding debt again. What do you think, though? Does the Fed need to go big and bold with QE2, or should it need to be more concerned about inflation? Lyle Bones, is that really your name? Writes, let's call it what it is. Printing money, which is the ultimate sign of government incompetence and mismanagement. The Fed's strategies will never work because the Fed cannot create wealth. Money and wealth are not the same thing. Good point. A lot of readers are very critical of the Fed. I think sometimes it's a little bit unjustified, but it's a very interesting argument that QE2 may not work. They are just turning on the printing presses, revving up the helicopters, whatever analogy you want to use, and that could create inflation down the road, which is exactly what the economy doesn't need in this soft patch it's in right now. Nick Jordan worries that the Fed is in a no-win situation. The Federal Reserve, for what it's worth, is fretting that bad things may happen if they act too soon in curbing inflation, but if they don't do enough, bad things are likely as well. So to be afraid is basically the message. The Fed is in this proverbial spot, between a rock and a hard place. It's hard for the Fed to figure out what it really needs to do. No one wants to see GDP growth at the subpar levels that they've been, particularly because it means we're probably not going to have any new jobs created at the type of level that's necessary to get the economy rolling again. Finally, even someone who is cautiously optimistic that the plan will work isn't totally convinced about that. Ian Hirsch writes, the QE2 easing announced should be $250 billion immediately and total almost $2 trillion in the next 6 quarters. The world economies can and will absorb it without much devaluation of currency. While the Fed policy may not work, we better all hope it will. The reality is, if it does not work, we may all have to learn Chinese quickly. Obviously, Ian thinks that the Fed should go big and bold. That would definitely satisfy those who want the Fed to have some sort of shock and awe. And if it doesn't work, you could wind up having the dollar continue to fall. You could have long-term treasury bond yields continue to fall. China's going to start getting even more antsy than it already is about the fact that it's investing in something that isn't really giving them any sort of return. I don't think that means we all have to learn Mandarin, but it may necessarily mean that we're going to have to bow to China even more than we may already be doing in terms of economic policy.